Yo, what's going on, everyone? It's Chase. So today we'll take a look at inflation, the upcoming CPI. We'll take a look at ES, S&P 500, and we'll take a look at Bitcoin. Before we get into everything, as usual, these videos are sponsored by Prime XBT. You can see my links at the bottom. Take 15, 20 minutes out of your day to, sign up, make a little deposit, do a little trading. That keeps all these videos coming. Okay, it's as simple as that. All right, let's get right into it. So here we're looking at CPI, basically inflation data, and we can see that this is just gonna. What I want to do here is I want to put forward and put to rest some of this conversation about how the Fed is all of a sudden going to do a pivot. I mean, does it look like we're ready to pivot yet? I mean, I get it. Maybe at some point they take their foot off the gas a little bit, but do we have to talk about them taking their foot off the gas every single FOMC? Because people have been talking about it now for 3 to 4 FOMCs in a row. Why are we trying to guess when they're going to take the foot off the gas when the print looks like this? Okay, so look all the way back to 2002. It's always around 2%. Okay, 4%, 3%, 2%, sub. Now we're back to 2%. 2% for the past 20 years. We're around 2%. Now we're at nearly 10%. So, and Powell says we're going to get it back down towards 2%. So I'm not in paint here or anything. I can't draw. But if I was to draw something here, I'd draw a little range in this area, a little range low, a little range high, right? And then I'd draw a little line, and I'd say when price gets back down towards here, right? When we get back down towards 4%, 5%, we get back, when we get right back around here, that's when I think can even start talking about, the Fed, just pulling back a little bit. Maybe we'll go down to 25, basis point hikes, something of that nature. But point being is, I think everyone is just so accustomed to, up only QE bull market. I mean, it's how it's been since 2008, essentially. Since the Fed basically started backstopping everything. I think everyone's so used to that is that they can't comprehend that, we got to get this under control. If we don't get this under control, you get hyperinflation, dollar goes to zero. And I mean, that has nothing to do with our bags. I mean, people will be, killing each other in the streets if that happens. So it just is what it is. They have to protect the dollar, the world currency, and your bags don't mean shit. And hopefully, that's a good opening to this video. And now let's get into the price action and the charts. So right here we have, I have some vertical lines. This is the CPI that'll be coming in. This is FOMC. This was the previous CPI, okay? So this is when we printed previous CPI. Let's go over to here. And we can see right at 8:30, right when the number dropped, boom, we start just tanking, okay? And it was just a downtrend ever since. The estimate CPI for this week is 8.8%, I believe. If we're over 8.8%, most likely a bad sign. And if we're under 8.8%, maybe a little relief, but probably a little relief just to take liquidity, in my opinion, or to reach sort of fill a level in here, back up towards here. That's possible, but okay, 1 second here. I think ultimately what I'm trying to do now is I'm trying to phase out a fundamental and think more technically, right? Like if you look at the weekly, right? On the weekly, you have, I guess I had this from a lower time frame, but on the weekly you had this weekly support before the impulse that pushed us down, right? So now this support most likely flips to resistance. So if we get back above here and we push into here, we should see resistance around 40.70 on ES, okay? And we'll cover Bitcoin after ES, but as you guys know, S&P 500 is basically, Bitcoin's leader, and wherever ES is going to go, BTC is eventually going to go one way or the other. Okay, so just back down to lower time frame here. What we want to do first is we just want to say, hey, where is the liquidity? Because we know I've taught you guys about ES. If you don't know much about ES, you can go back to the Everything About ES video. If you don't know much about trading ES, you can once again, everything about ES video on my YouTube, or also the entry techniques video, which has been pretty much my highest regarded video. Thanks for all the kind words. And some of you guys said that stuff's been working for you. It's great to hear. So, previous CPI here, big breakdown. Didn't take any liquidity before we had a big breakdown, right? Which was interesting to me, because usually these big, these big fundamental events will be utilized to draw liquidity. Okay, so what I could imagine, we're just gonna do some drawings here. As usual, these drawings are not really predictions. They're more about being prepared for potential scenarios. So when we look at this chart, we're on the daily chart, right? We have to say, okay, well, where's the liquidity? In my opinion, we have liquidity above these highs, and we have liquidity below these lows. Okay, I just drew it over here just to make it look cleaner. But so we have liquidity below these lows, above these highs. Let's say we get a print of, and this is where the entry techniques video comes in, right? Let's say we get a print of 8.5%. Everyone's like, oh, so bullish, because we're below the expectation, right? So we have a 8.5% print. We come up bullish. Now, we've taken liquidity, right? But we're not looking to get short just because we've taken liquidity. Again, go to the entry techniques video, and I teach you all about this. But just briefly to show you, let's say we take liquidity, and there's no impulse down or anything. We're just consolidating and we bounce off. Okay, well, this may be when we're going towards this level, right? But let's say we have that print. Let's say it's an 8.6% print or something, 8.5%. We come up, okay? So we're walking up, take liquidity, we go a little higher, and we get a strong impulse down. Okay, so that they smack it back down. Big money smacks it down, right? Because these are the most liquid futures in the world, right? Basically the most traded asset in the world. When big money steps in, typically have to respect it. So again, back to entry techniques video. What would we do here? We would look for the support before the breakdown. When it comes back up to retest that level, that's when we would get short. Where are we targeting? The other side liquidity. Obviously you'll have, let's say these lows stay intact here, like these lows, you would have like your target 1, then we look at this low right here, target 2, and then you have these lows right here, and that would be your target 3. Okay, so you'd be taking profit along the way. And again, the ES is available on Prime XBT at the bottom. You can see my links there under the ticker SP500. Okay, S&P 500. But over there it's just called SP 500. Okay, so that's one scenario, right? Or we just sort of talked about two scenarios. Basically where we flip this to support and we don't get a breakdown, right? We don't get that. We just flip it to support, go up to like 40.71 on a really good print. At this point, I'd start looking for this to resistance. I'd be trying to find shorts around here. Okay, different scenario. We get the move up, we get the impulse down. We look for the support level that sent us back up right there and breakdown. Okay, that's your second idea. Now you have these lows here. Let's say we get a high print. Let's say we get a 9% print or something above the estimate. Now this is where you want to be really careful, because again, just because this is liquidity doesn't mean we're going to get a bounce. But if we do get that bounce, right? If we do get that strong impulse back in, we can look at the consolidation that sent us down, right? And again, we can buy that, and that would be our potential long position there, right? So the point I'm trying to make to you guys is you don't want to just blind short liquidity. You don't want to just blind long liquidity. Use the strategies that I taught you in entry techniques, and then I'm showing you here a little bit more. Use those strategies to try to find your entry. Don't just think, oh, liquidity taken, short. That's not the way it works, because sometimes you'll get liquidity taken and it'll fake you out a little bit and then it'll push. So that happens too. So we have to monitor price action and be cognizant of what's going on in the price action. Okay, in my opinion, if we do get a high inflation print above the estimate, I don't even know. I don't think you get a like a liquidity sweep and a bounce here. in my opinion, you're probably going all the way down to this low. And at that point on this low, you're probably getting like a minor bounce, right? You're getting something like this to maybe retest like these lows or something. Oh, this magnet. Yeah. So maybe you're retesting those lows or something, and then you're probably just going lower if we have a real nasty print on inflation. Okay, because a nasty print on inflation, I mean, you guys know what that means, right? That means as we get towards FOMC, they're sticking with their 75 basis hike, or maybe even going up to 100 basis hike if inflation is coming in really bad. Okay, 1 second. So that's basically ES in a nutshell, right? Is that we zoom out, because when we have a major event, we want to look at a major time frame, right? We don't need to be on the 15-minute to try to plan around a major event. We want to be on the daily, because a major event is probably going to bring major movement. And when we're talking major movement, that means we want to be on the daily or the weekly. The daily is enough, okay? So we can be on the daily, and we can say, hey, we got liquidity up here to watch. We got liquidity down here to watch. We have a prior major support level here that should flip to resistance if we move up into it, right? But that'd be at least one trade up there that we can find. Watch it push into here, watch some consolidation, the breakdown. Again, the same type of strategy works, and then look for the retest to get in. Okay? And then, also you still have your lows down here. So there's a lot of liquidity to watch, and in my opinion, what you do is you wait for, this information to come out. You stay a bit zoomed out, because you gotta be careful. You can get chopped up on these days where, major, news, major fundamental, whatever you want to say, comes out. You can get chopped up on those days. So you can stay zoomed out, watch the areas, and once these areas come into contact with, that's when you start breaking down to your lower time frames and try to find your entry. Okay? Let's move on to Bitcoin here. So Bitcoin, we are on the daily right now, and basically what you're going to see is that my thought process from ES is fairly similar as to how I see Bitcoin, right? So ES, this level right here on ES, right, is basically this level here on Bitcoin. You could find this level on hourly. And why do I have this level marked? Well, let's just take a look. We break upwards, we hit resistance here, break down, support, look at all these closes, look at the respect. Support, never closes below, right? Wick. Okay? So this level is essentially this level on ES, in my opinion. And if we reclaim this level, then we may go back up towards this liquidity here and this resistance level here, which would most likely correlate with this moving up, flipping this to support, and maybe not fully moving up to here, right? But maybe just doing like some type of a little bit more of a push above this high, consolidate, and then probably break back down, because I don't see ES breaking up towards here immediately, and I don't see Bitcoin breaking out above here immediately. So I think sort of they'll work in tandem, and you just have to keep an eye on both, on price action between the two, right? So if, and things can change, but put it this way, if ES gets here, right, and you're in a long on Bitcoin, so you're long on Bitcoin and Bitcoin is here, okay, so price is here, but ES is up here, okay, it's time to close that long, okay, you're at resistance, ES is at resistance, it's time to close that long. You can't always just say, oh well, you used to be able to, right? When Bitcoin and crypto wasn't so correlated to equity markets and whatnot, you used to be able to just trade them on their own, but now you have to have some confluence between the two, okay? For me, optimal situation is we do get some type of a move up, we run this liquidity into this resistance level here, and then at that point, we get a strong hike or something, and we get a nice downtrend all the way back down. Okay, that's what I would like to see. Not for any specific reason. just for trading purposes. I think it would provide clean trading. I think it would provide a clean trading experience. I think a lot of people, I did a Twitter post about this. A lot of people are looking for, this void essentially to be filled, right? When's it going to be filled? In my opinion, what we're going to get eventually is we're going to get something like this. We're going to get this level flipped. People are going to think that we're going to fill this void. Longs are going to pile up. We're going to wipe out all of them or something. And then at that point down here, every single person is calling for, sub 10K, sub 10K essentially, right? Oh, sub 10K is coming, Bitcoin is worthless, the usual. And then at that point, once no one's in longs anymore and everyone's terrified and everyone's given up on the bullish case for Bitcoin, at that point is when we come back up and we fill that void back towards 28 to 30K. Okay? It's going to take some time. Maybe one day I'll be posting this video like I did the ETH video on Twitter. It's going to take some time, but most likely, in my opinion, you don't fill this void when people expect you to. And, we've been hearing some bullish rhetoric lately, some people thinking that the Fed is going to change their tune. I mean, these are just Twitter anons. But in my opinion, we're, pretty far from that still. And if you even did get a move up above here, in my opinion, that's just a fake out. And that's going to be, everyone gets long here. You're filling the big player shorts, as all, retailer getting long, big players are filling their shorts all the way back down. This is when everybody pukes. Everyone pukes all their positions. You're filling the whale. The whale's filling all his longs, and that's when we rally it all the way back up towards 28. Okay? So that's how I see Bitcoin playing out on a longer term scale. I mean, for the short term scale, we did talk about potential move up here. So just for CPI in general, I mean, if ES is bullish and we can flip this back to support, we could probably go back up towards here, or at least these resistance levels in here that I showed you earlier. On the downside, when we're looking at Bitcoin and where we're seeing liquidity, all these lows, okay? So, deviate all these lows, probably back up into the range. I mean, we could be chopping this range for a while, guys. That's why I say you got to take profit quick. I'll show you guys the trade I took today. I posted about it, I think, last night. Let's just clear this off real quick. I said that Bitcoin's going to do its typical PA. I put a question mark, got to hedge myself. But I said Bitcoin's going to do its typical PA, right? And it was up here. People were already getting long and shit. Because you know why people were getting long? Because it actually makes sense to get long. Because this is the support level that caused the impulse move up, right? And typically, this area here would be the support that pushed us up. And, well, that's not what I meant to say. This is the area that pushed us up. Typically, the top of this level would hold, okay? So either the top of it would hold or the center of it would hold. Basically like your 50% point. There we go. So typically the top holds or the 50% point holds if it's actually bullish, right? And this is how Bitcoin used to work, and it's often how ES and other stocks work. That's just how the price action is on most assets, in my opinion, is that you typically bounce off of the previous resistance before the impulse up. Okay, so you have this resistance, you push through. This is where your most recent sellers were. So that means when you're coming back down, this should provide your bounce. But ever since 6 months ago, or basically since the bear market started, Bitcoin does not do that anymore. What it does is it comes back all the way down to the origin of impulse, it sweeps it, and then it gives typically just shitty bounces. It'll bounce off of it a couple times, and then eventually it breaks down more. And I guess that's the new typical bear market price action. What did I do? My play was very simple. I just bid right below the origin of impulse, right? Because just look, consolidation, consolidation, consolidation. What starts this big leg up is right here, this low. So I just bid right below the low, and I just took profit at the nearest, basically your nearest support before the impulse moved down. Okay, so you have this support level here, candle goes directly through it. That's your resistance level right there. It was a simple, 2-hour trade or something, nothing special. But just so you guys know, that is typically how Bitcoin price action works lately. Is you typically just retest the origin of the impulse. You just sweep it a little bit, then you get some consolidation bullshit. And people long all the way down, right? They long this level, they long this level, and it wipes them out. Look, when you get that retest, they get out here. You can tell they're getting out because we get rejected. And then people buy the top of the consolidation, right? And then look, you can tell people are getting out because of the rejection. And really the only place to buy and to take profits quickly is to just buy below the origin of impulse, take profits quickly, and it's as simple as that. Okay? So you can keep that in mind for general, intraday slash, it's not really, it's more of an intraday trade based on a couple days of price action. I guess that's how you put it. Okay, so covered ES and liquidity levels, covered Bitcoin liquidity levels, potential support resistance flips, potential liquidity level resistance here, and a longer term view and thought process. And, just to bring it back to the CPI, right? We have to, not we, but the Fed has to get things under control. And, this is a runaway train right now, guys. This ain't under control. So I'm not seeing them backing off the strong hikes yet. Let's see what the CPI print comes in like. And then that should give us a decent idea of, again, no matter what the print is, unless it's something crazy like 6% or some amazing surprise, no matter what the print is, even a print below the estimate, in my opinion, is just it would give you short-term bullishness, right? So maybe a little short-term bullishness just to take liquidity, and then maybe even resistance, and then back down. And obviously a bad print most likely just means lower. Whereas you could take liquidity, you could get a little bounce. You always watch for that trade opportunity, but then most likely just more down. Okay. Let's see. Is there anything to talk about in general? Not really. Price action's been a little bit boring lately, I guess. You could see it in the chart, right? It's mostly consolidative in nature. I think a lot of your whales and your big players are, enjoying the summer months. You see a lot of people on crypto Twitter who definitely are just they look like they're at the club rather than at the chart. And that's fine. Things are slow right now. Things are a little boring right now. It is a good time to improve your scalping skills. If you're an up and coming, inspiring, trader and whatnot. Again, check out, my entry techniques video, the everything about ES video. ES is where you'll find your better scalps, in my opinion, right now than Bitcoin. Bitcoin's pretty just choppy. It provides a good trade, every other day or so. But I haven't been focused entirely on crypto lately, more on ES and some equities. Outside of that, just keep an eye out for CPI. Keep an eye out for FOMC later this month on the 27th, I believe. Watch these liquidity levels. ES loves its liquidity. That's where people say, oh, well, what's the deal with what's up with this liquidity? Why does it go for liquidity? It's just it's how the big players feel, right? You got to think your retail participants, and even though I'm a retail participant, but you got to try to not think like a retail participant. Where are all the stops right now? There's a lot of stop losses above these highs, and there's a lot of stop losses below these lows. Okay? So in order for the big players to get the fills that they want, price gets pushed up into here, everyone gets stopped out, and what happens when you're getting stopped out? Let's say you wanted to be short, right? And we get a decently good print. You want it to be short. Price pushes up into here. You get stopped out because you have your stops above these highs. Well, when you get stopped out, that means you're forced to buy. And when you're forced to buy, that means the whales' asks, aka their sells, are getting filled. Okay? And then the move plays out without you. Okay, so that's how it goes, and that's why we watch liquidity levels. Okay, and hopefully that's a pretty quick and succinct explanation. All right, as always, guys, thank you very much for tuning in. My links are at the bottom. Please, as I said, sign up, deposit a couple trades. Takes a little bit of your time, and I keep these educational videos coming. 4 times a month, pretty much is how I do it. All right, thank you very much, everyone, and have a great week.